Everyone has an S&P forecast. Most of them come with a straight face and zero margin for error. But markets don't reward confidence. They reward being less wrong than everyone else. So today, we're asking a much harder question. Where does the S&P actually close at the end of 2026? After fundamentals, technicals, and reality all take their shots. Welcome in. This is PrimeTake, where we break markets down from both sides, fundamentals and charts. And quick favor, before we dive in, if you like analysis that respects uncertainty instead of pretending it doesn't exist, hit like and subscribe. This channel's new, and early support helps more than perfectly timing the top. This market isn't asking if stocks go up or down. It's asking where expectations settle after. Multiple earnings cycles, monetary policy shifts, and sentiment swinging from soft landing to uh-oh at least 3 times. Year-end prices aren't momentum snapshots. They're the final exam. Let's start with fundamentals, because price eventually has to answer to math. On the earnings side, forward earnings for the S&P are expected to keep growing into 2026. Large cap leaders are still extremely profitable. Margins are elevated but no longer expanding aggressively. That supports higher absolute prices. But on the valuation side, multiples are already above long-term averages. A lot of future growth is prepaid, and upside increasingly depends on earnings beating already optimistic expectations. So fundamentally, the market is in a tension state. Growth is real, but it's no longer cheap. Here's the key nuance. Strong fundamentals don't mean smooth price action. Even in healthy markets, earnings come in uneven, guidance disappoints, and multiple compression quietly offsets growth. That's how you get years where profits rise, but indices don't explode. Markets are pricing that possibility very seriously. Now let's talk charts, because fundamentals set direction, but technicals control timing. On long-term charts, the S&P has a clear rising trend channel, strong historical resistance zones above current price, and major psychological levels that tend to attract sellers near year-end. Every time the index stretches far above its long-term moving averages, something happens. Either price stalls or time does the work through sideways chop that matters for a year-end close, not just intra-year highs. This is why range markets are so interesting. You can have a big rally in Q1, a drawdown in summer, a recovery into Q4, and still close the year, basically in the middle. Technically, markets love to mean revert into year-end respect, long-term trend lines, and close near areas of heavy historical volume that makes a precise year-end range harder to bet against than a single directional call. Here's the wild card: volatility. Even in bull markets, volatility, spikes around policy, compresses valuations and forces de-risking. At the worst possible moments, volatility doesn't kill trends. It reshapes them. And year-end prices often reflect exhaustion, not excitement. So when you combine solid but priced-in fundamentals, elevated but vulnerable valuations, technical resistance overhead, and a history of messy year-end paths, you get a market that says upside is possible. But closing cleanly at extreme levels is harder than it looks. This market isn't bearish. It's not euphoric either. It's pricing progress with friction, growth with volatility, and optimism with guardrails. That's not confusion. That's experience. And here's the prime take. Fundamentals tell you why the market should grow. Technicals tell you where it's likely to stall. Right now, the market is saying the S&P can go higher, but where it closes at the end of 2026 will depend on how much discipline survives the journey. Anyone giving you one clean number is selling certainty. Markets are selling probability. If this helped, hit like, subscribe, and stick around. I'll keep breaking markets down from both sides because price only makes sense when fundamentals and charts agree. And we'll keep tracking the odds because money has a way of cutting through the noise. See you in the next one.